there are no rich, low energy consuming countries. And so whether we have population decline because our birth rate's not keeping up with our death rate, or if we offset it with immigration, okay, as we get rich as a country, people go to school and then they get out and they feel smart and entitled and career oriented and they don't want to have kids and they don't have kids. And look who's not having kids.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Well, the Luka era started just a little while ago in Laker Nation, and I just saw the alert. Of course, I'm not watching the game. I'm working. I'm here with you. I'm trying to clear my desk, tell you about this crazy week. We have inflation week, CPI, PPI. We had jobs week last week. Chair Powell is speaking tomorrow. We have our second acting director of the CFPB, who is a lot more active than the last acting director, and basically just said no one do any work. So there's a lot to talk about tonight. And then, of course, I'll be in Park City tomorrow. If you know, you know. All right. 143,000 jobs added in the January jobs report, which is really the second half of December and the first half of January. It's hard to collect the data, especially when you're doing surveys and calling people. There's household establishment survey. There's all kinds of stuff. Population matters. And I will get into population decline. I will get into energy consumption really quick here. I may even talk about Dyson spheres if I have enough time. But I'll just say that the population number adjustment, it's hard to track this stuff. It's like we don't really know. It's 335. You hear people round up. Maybe there's 340 million people in this country. Immigration is an important topic because quite honestly, it's a lever that the government can pull for good. And, so remember, we started this country, bring your poor, you're tired, you're hungry, and we need a workforce. We need a growing workforce. Now, if we are overloaded with debt and things are really bad financially for our country, which most people would agree universally are, you get to a point where maybe you have too many people here. And I'll give you a case in point. The global financial crisis of 2008, when President Obama took office, he deported during his 8 years 3.2 million people. And he was known as the deporter-in-chief. And now, I am not trying to play politics because, of course, on the other side of the aisle, President Trump is talking about deporting people. And in his first administration, he deported 1 million people. I don't know where he's going to go with this policy. I don't know how far they're going to go. I will say in my neighborhood, literally in my neighborhood and one city over, it's nice that Chilean cartels are being arrested who've been breaking into our houses for the last several years. So I like that part. Now, I'm not going to get political. I don't want to say no trigger anyone, but population is important for our workforce. Do we have too many people in our country or not? Do we have a growing workforce? The labor report last Friday seems to say things are kind of like at homeostasis. So I think right now, I don't think we should be deporting a lot of people. Let's just get rid of the bad people and the criminals, and let's see where we lay. That's my mathematical thought here is that, we've got a nice, sturdy workforce, especially according to this jobs report. And of course, there were downward revisions from the summer, like June, July, and August had 83,000 jobs reported per month. But then, of course, we had some upward revisions in December. So I don't really know what to think. But the most accurate way to find out what our actual job numbers are is when we have this kind of quarterly review that comes from the states. So when the states say, hey, these are what the employers are saying that they have as employees, and they reconcile it with all the surveys they've been doing on these jobs reports, that's where the rubber meets the road. But it's always after the fact, after the market's already sold off, and you and I lost all of our money and our stocks and all that. And so speaking of stocks, I think one of the biggest movers. Remember the middle earnings season right now, like stocks and bonds, treasuries, mortgage-backed securities. They all flow of money. It all matters. Like if you don't look at the stock market, you're crazy, and you're not really focusing on the flow of money and what institutional investors and risk managers are thinking. And so Chair Powell speaks tomorrow, and I think he speaks for, I think he speaks a couple times this week. Then on Wednesday, the consumer price index comes out, and I don't know what to expect there. I've seen ranges all over the map, and then the PPI comes out on Thursday. And remember, the PPI, the producer price index, those elements feed right into the core PCE, which is the Fed's preferred inflation measure. So, super microcomputer reports at the end of the day tomorrow. We got a bunch of other ones. I can go into all that. I am not a financial advisor, not responsible for your losses, only your profits. But there's a lot of market moving data this week that's coming out. And so we'll just watch it. The unemployment rate went down to 4% from 4.1, but that's because of these population number adjustments. And so it's important to talk about immigration, deportations, our workforce, birth-death ratios. I wanted to get into something you probably never heard. Did you know there are no low energy consumption rich countries? And I want to say that again. Countries that are rich consume a lot of energy. There are no rich, low energy consuming countries. And so whether we have population decline because our birth rate's not keeping up with our death rate, or if we offset it with immigration, okay, as we get rich as a country, people go to school and then they get out and they feel smart and entitled and career oriented and they don't want to have kids and they don't have kids. And look at who's not having kids. So we bring in people to offset that population decline. But you can have population decline and still have high energy consumption. Look at how much money is about to be spent on all these data centers. We're talking about having to get nuclear power plants just to fund all these things. Everyone's going to have like a robot doing chores in their house in not too long, and maybe a little spare Tesla on the side roaming around picking up, people and blowing out truck drivers and Uber and Lyft and all that. It's coming, and energy consumption is a big deal. Tesla announced, and they think they're going into production for their humanoid robot, Optimus. 20 billion humanoid robots on this planet that only has 8 billion people. I mean, people are going to have multiple robots out there doing multiple things. Government have things. I'm telling you, population numbers is a big deal. And so watching immigration, deportations, labor force, and energy consumption is very important. The more energy we consume, the more tax base there is, the more we invest in future technology. And high energy consuming nations are rich nations. And like I've said before, our poorest state is Mississippi. The standard of living in Mississippi is higher than the median standard of living all the other G7 nations. Energy consumption is important. And I know it gets hot in the summer there, and you got the AC on. All right. Hourly earnings did climb. And I heard Hans Yatzis from Goldman Sachs on CNBC last week. He tried to explain why he thought there was this outsized move in wage inflation growth going from what was supposed to be 0.3% month over month to 0.5%. A lot of year-end bonuses, a lot of stock people in there and financial people in there getting a ton of money. The stock market's been ripping for the last year. And so he felt like maybe there's some distortion in that monthly number. That's why the Fed looks at lots of numbers. I saw Neil Kashkari, who's the Minneapolis, Minnesota Fed governor. He was talking on CNBC. He said they're basically waiting the entire first quarter to see how inflation shakes out. So they're not really in a hurry. They also are putting a lot of weight on the continuing resolution, March 14th, 15th. That debate's coming around the corner. And will a budget get passed? Will there be tax cuts extended? Plus, how's the government doing? Is our GDP going well? There's a lot of stuff coming out here. And so, you know what? The bond market came down last week. Mortgage rates got nice and friendly when the Treasury secretary said, I'm going to focus on the 10-year. Isn't that great to hear? Don't we all want lower rates? They're focusing on the 10-year. Like, that's the bond that has to do with rates. I think that's fantastic. So, could we have a surplus in treasuries? Maybe our tax, revenue comes in good. The Habibs over MBS Highways said we could finally on our balance sheet convert the gold that's on our books, which is at $45 an ounce, to today's all-time high, almost $3,000 an ounce. I actually said that on a video a month ago. I know you heard me. So there's lots of levers to pull here. It'll be interesting to see how it all shakes out. It's a very interesting week. Essentially, we have a 3-year, a 10-year, and a 30-year Treasury auction. So we kind of run the gamut on short, medium, and long bonds. And then I'll have my popcorn out watching what's going on at the CFPB. I mean, the NBA stance is we don't, careful what you wish for. We don't want no regulation because then the states will step in. And if you're in a pretty tough state, they may step in kind of harshly. And then you've got to worry about all these different states looking at you in different ways. So we'll see what the shakeout comes to CFPB. Chinese tariffs, no big deal. I mean, they started today. I don't know. Aluminum and steel tariffs got announced today, and the stock market went up. Who knows? See you in Park City.
Hey, it's KP coming to you live from Deer Valley, up here with the Hurt No More group, and just wrapped up the last word with the Crispin commentary. So we had the Mortgage Collaborative Board Retreat this week as well, and so a lot of collaboration, a lot of ideas being shared, and happy Valentine's Day, and of course, happy President's Day next week. My kids are off all week, so God bless us. 17 kids and 10 adults in our house starting tomorrow. So I'm going to try and get some runs in this afternoon. I've been up since 4 a.m. so I can get caught up in work. Inflation was hot this week on both CPI and PPI. But remember, the Fed's preferred measure of inflation is the CPE. And the PPI components that are going in to feed the whole of economy inflation numbers were not too terribly strong. So we'll see what happens at the end of the month when those numbers come out. The bond market, touched on the highest 10-year end of the range. The got up to about 4.6, and now it's down about 4.47 today. So rates are holding in despite that. January is traditionally a little higher, a little hotter seasonally, just like last year. So we'll see the next couple months. There's a full set of data coming out before the next March 19th Fed meeting. So we'll watch the 10-year Treasury. We have a new CFPB director actually appointed. So we went new, and now new. So no more acting director Vaught, who was acting director from Besant. We have a new CFPB director, Jonathan McKernan, who is an FDIC board member. So we'll see what happens over there at the CFPB. Obviously, it's still our consumer regulator. And remember, they can't delete it without an act of Congress. So we'll keep an eye on that and watch what goes on there. Obviously, the markets keep churning and the velocity of money keeps spinning, and we'll keep you posted on it. I do want to point out that despite all these rounds of tariffs and fears of inflation, we haven't seen it yet. So I'm not saying we won't, but if we wind down some wars, we'll get a peace dividend. The last presidency for Trump, the tariffs, which were actual trade wars, ultimately were not inflationary because they were starting at a 2% rate of inflation. Now we're at 2.5% to 3% inflation. So even a little bit of uptick in inflation from these tariffs could hurt. So we'll keep an eye on all that and have a long, wonderful weekend. This is one of my shorter videos. A lot going on in our industry, and the trend is for rates to continue to come down, and we'll watch every data point that comes out. Have a wonderful long weekend. Happy Valentine's Day. Happy President's Day. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.